Hello, everyone. We are down to our last two sessions for our Global DeFi Summit this year. So on behalf of SCB 10X, thank you all so much for your interest. I am Michelle from SCB 10X's venture capital team, and I am very pleased to welcome Simone Maini, the CEO of Elliptic. Join us here to talk about the future of regulations and Elliptic's role in shaping compliance for the blockchain industry. So first off, Simone, can you introduce yourself and talk about Elliptic's story, your product offering, and the types of clients that you serve?
Yes, absolutely, Michelle. Great to be here. Thanks so much for inviting me to come and talk at your event. You guys at SCB 10X always put on such brilliant events, so thanks very much for all the work that you do. To introduce myself, I'm Simone. I'm the CEO here at Elliptic, as you know, and I really came to the company initially about 5 years ago because I was just really drawn by the mission of what Elliptic was trying to achieve. And for me, it was a great opportunity to be able to bring together my experience in traditional financial services. I'd spent about 10 years in investment banking, but then also some experience that I had in anti-financial crime. I'd worked in consulting, often embedded inside Wall Street banks, helping them navigate their AML challenges, usually related to the deployment of regulatory technology solutions and how they could use technology to manage that. And so, when I came across the opportunity at Elliptic, it really felt like a brilliant merging of that experience in banking, financial crime, but then applying it to this totally new and exciting asset class. And so that's kind of how I came here. And I mentioned that our mission is just really compelling, and it's really to help encourage and facilitate the adoption of crypto assets in a safe, trusted, and transparent way. And so, fundamentally what that means is that we're offering products that can help you understand and manage your risk exposure in crypto. And that can mean lots of different things. So that might mean scalable, easy to use transaction monitoring solutions. It might mean powerful forensic analysis and investigations tools, or it might mean insights into VASP risk, for example. And so we work with very large variety of financial firms really that want to be able to understand that risk exposure. They might be crypto native businesses that you'll be very familiar with the names. They've been around for a long time more on the CeFi space. But also with fintechs that are, more recently have been adding crypto products and services to their portfolios and giving access to their customers. But then also more on the traditional financial services side. Obviously, this year there's been a lot of headlines about, big name banks and other financial institutions getting into the crypto space. And sometimes that will be we're helping them because they want to offer crypto products themselves, but sometimes it's also because they just recognize that as the fiat and the crypto economies are converging, the crypto risks are becoming more and more part of their day-to-day risk management. And so they need to understand exactly where they might be exposed. And that's certainly something we can do for them. And then, of course, we do work a lot with regulators, law enforcement agencies. They're such a key part of the overall ecosystem. And I know we'll talk about them a little bit more later as well. But, helping them use the technology, understand it, and also just helping them shape the regulations as well.
I understand that actually originally the company was a cold storage custody provider. What inspired that pivot from providing cold storage custody to crypto? Because I understand that you guys entered, the compliance blockchain scene way before that institutional crypto adoption wave. So what was it that the blockchain industry was compelling for a RegTech proposition?
Yeah, you're absolutely right. So, Elliptic actually started as a custodian back in 2013, and we were actually the first custodian to ever be insured by Lloyd's of London. And from that perspective, we're certainly a trailblazer on the custody side. And when the three founders of Elliptic, came together to build the company, their primary interest was to build something, useful and important in crypto, because they just saw the space and the technology as having so much potential. And so they started with custody. And as we were onboarding our first customers and we were taking custody of their funds, we wanted to make sure that we were complying with potential AML regulations. And so we wanted to screen those funds before taking custody of them for AML risk, essentially. And so we went to market to look for a partner, a technology vendor that could help us do this. And there just wasn't anyone doing anything like this at the time. And so we built something in-house that would enable us to do that. And, we reached the conclusion pretty quickly that, first of all, we're actually pretty good at this, building the identity graph and using it to build products that would enable AML compliance in crypto. But perhaps more importantly, we recognized, very quickly then that what we were building, this sort of AML technology, was just going to be so core to the overall growth of the ecosystem. And so from that perspective, we started to see our role more as building this enabling infrastructure in the space. And, I think that's something that, because, the founders came to this mostly because they were just interested in helping push the industry forward. We identified that really early, that if we were going to move forward together, we were going to need to provide this type of capability. And so that's when we decided to make the kind of full pivot and just be laser focused on solving that problem. And I think, one of the most important aspects for all of us to think about is that, if we want to disrupt this big existing industry, which, we've been working on and for some time, we have to expect to be held to the same standards as they are today. And so, I think that's where Elliptic anticipated this sort of widespread regulation of crypto well before it even existed. And, we were able to work with some of the earliest players in the space who also recognized that compliance was going to be really important and were proactively putting compliance at the core of their business. And so I think, that's really what brought us to where we are today.
Yeah, and it's really a reflection of foresight and discipline, to really do it before you were asked of doing it. I believe that, Elliptic is in a unique position because, unlike traditional finance, the crypto industry was arguably built to, circumvent as much government oversight as possible and to preserve anonymity. So what do you think are the key differences between the RegTech playbook for traditional finance versus the crypto industry?
Yeah, sure. So, there are some key differences, but there are also some key similarities, right? And I just said, in terms of, the standards we're going to be held to, the way regulators operate, I think we have to expect a lot of that to be the same. And that, we're going to have to operate really on that level playing field. But as you pointed out, there are some fundamental differences, and, AML in crypto is certainly, is different in important ways to AML in fiat. I mean, first and foremost, is the transparency, right? So all the transactions are happening on these open, public, immutable ledgers, which means that, you can trace counterparties and transactions, or as far as you would like to, which you can't do in the fiat world. And so that means that what we're doing is fundamentally different and actually much more powerful because of that transparency. And so I think, on the one hand, that translates into more obligations for crypto businesses because we can see so much more. But instead of seeing that as a downside, I actually see that as a huge opportunity for us as an industry to demonstrate actually how powerful and effective crypto is as an asset class that is almost kind of anti-financial crime by design, right? And so I think, you know, we have this opportunity as an industry to show that we're actually better from an AML perspective, and certainly Elliptic's research bears that out. So we've shown that actually less than 1% of all activity in crypto is related to illicit activity. And the very fact that we can understand and measure that and, you know, improve on that metric year over year together, I think is you know, clearly demonstrates, you know, one of the core differences.
You know, you mentioned traceability about blockchain, but, you know, at the same time, I also do feel like with blockchain, criminals do have so much at their disposal, because like transactions are beginning and ending with programming. And there are these privacy-centric innovations such as Monero coin that is designed for anonymizing profiles. And I can only imagine, you know, the level of sophistication by cyber criminals, you know, increasing exponentially. So what are some of the more recent, you know, techniques that cyber criminals are exploiting on blockchain that you might not have witnessed a few years back?
Yeah, so look, you're absolutely right. You know, and I think in the early days of crypto, we certainly saw even more criminal kind of adoption of crypto, in the same way as you see criminals embracing and experimenting with any new kind of technology. But it certainly has been coming down and down over time. But as in traditional financial crime, it's also a bit of a cat and mouse game. So, you know, as they develop techniques and then we develop counter techniques, you know, it shifts, and they're experimenting with new methodologies and techniques to avoid detection. And so, you know, today, increasingly, one of the things that we're seeing criminals relying heavily on are privacy wallets. So wallets such as Wasabi Wallet. So privacy wallets help criminals to obfuscate their transactional activity, similar to a Bitcoin mixer, for example. And so they have grown to be a major method for money laundering in crypto. And, you know, in our research at Elliptic, we estimate that about 15% of all money laundering in Bitcoin involves the use of privacy wallets. So that's certainly one aspect. I mean, you also mentioned Monero. So criminals will also try and convert transparent cryptocurrencies like Bitcoin for Monero to help break the funds trail. And frequently that will involve exchanging funds at unregulated exchanges in countries that have little or no regulation in place around crypto. And in particular, we see this happening with ransomware attackers. So they'll rely on Monero and the combination with unregulated exchanges as part of their money laundering techniques. And, you know, we can also talk a little bit about chain hopping. That's something else that criminals will frequently do, you know, it involving swapping one currency for another in order to break the chain of traceability. But where exchanges are complying with AML, like that isn't necessarily a problem. So if an exchange is using blockchain analytics tools, then they can detect criminal activity among their customers. And so, for example, at Elliptic, our solutions cover more than 130 different crypto assets, and exchanges can monitor customer transactions for the majority of the transactions they process. But the truth is that not all exchanges in all jurisdictions are using blockchain analytics or complying with AML measures. And so if criminals are chain hopping, then law enforcement will have a harder time, getting information about those fund flows.
So, shifting gears and diving into the regulator's perspective, what do you think are some of the top regulatory developments that are shaping the narrative for the crypto industry? And what are the big takeaways that you can get from that?
Yeah, I mean, there's a lot to unpack here, obviously. I'm not sure that there's another area of finance where there's just so much, regulatory evolution. The pace of regulatory change is just, it's really extraordinary. And I think we've probably seen more change in the last 12 months, perhaps, than we have in the last, 4 to 5 years. So, I think probably one of the first things I would call out is just regulatory enforcement itself. For many years, the regulatory trend has been around developing the regulations themselves. So seeing the regulators outlining the rules they intend to use to oversee crypto businesses. But I think we are now moving into a new phase where it's not just about writing the rules, it's about enforcing them. And we've seen clearly a lot of activity on this front just in the last few weeks alone. And we absolutely should expect it to continue. We often hear that crypto is unregulated, and clearly that isn't true. It's highly regulated and has been for some time. And a study that we recently published showed that regulators have actually imposed penalties of over $2.5 billion for crypto-related violations. That's coming from the likes of OFAC, FinCEN, the SEC, the CFTC, for all manner of violations, for securities law, fraud, AML sanctions, and more. And so I think we should expect to see more enforcement, especially by US regulators, against overseas exchanges that are non-compliant with AML regulations. I think closely related to that, we should also be looking for more global coordination. And so, a lot of what we've seen is coming out of the US, and crypto businesses there are subject to the same laws and regulations as any financial services business. And they are some of the most stringent rules governing the provision of financial services in the world. And I think we're seeing the continued exporting of those rules globally, as well as regulators actually coordinating their efforts too. And when they're seeing things that they're not happy about. I think something that we should all recognize is that, the level of crypto literacy amongst financial regulators is now extremely high, and it shouldn't be underestimated, and there will be, consequences from that as well. And then, finally, I would call out the travel rule. We can't really talk about regulation without talking about the travel rule. It's obviously been talked about extensively in many forums. I'll just call out one interesting development recently, just in the last week, in the UK. There's been a new consultation released by HM Treasury that sets out the UK's approach to the travel rule. And I think what's really interesting about this is that having passed on implementing the travel rule in 2020, because they didn't feel that there were sufficiently developed technology solutions to enforce it, they now feel that the solutions are ready for them to move ahead. So this isn't going anywhere. And you've got more and more countries now embracing the travel rule, giving clear indication of how they intend to regulate for it, and encouraging development of technology solutions. And so, and consistent with the FATF guidance on travel rule, the HM Treasury guidance also discusses whether crypto businesses should have to identify beneficiaries and originators of unhosted wallets as well. So I think these interconnected issues of travel rule and unhosted wallets are not going anywhere. And certainly we're going to see further kind of global adoption of these regulations.
Seeing that development in the travel rule, it makes me think, do you think it's practical for regulators to impose the same KYC AML standard between traditional financial institutions and DeFi CeFi institutions? And if regulations really converged to one standard between fiat and crypto, what do you think are the blind spots or challenging areas that regulators would need to address?
So I guess I would say, are we actually asking the right question when we're challenging whether it's practical or possible? As I said earlier, we have to recognize that if we want to disrupt an existing regime, we will more than likely be subject to the same rules and regulations and compliance requirements that applied to that old way of doing business. And so whether we think it's practical or not is almost irrelevant, because it's going to happen anyway. And so I think what we should be focusing on is, how do we influence it? How do we provide strong engagement with the regulators, engaging in public-private partnerships and collaboration so that we're promoting those strong relationships and understanding between one another. And I think, fundamentally demonstrating that we see addressing financial crime as a core goal for the industry. Like, those are all important things that we can work on together. So I think, as I said, I think this is sort of happening whether we think it's right or wrong, and it's about how we can shape it and actually see it, also as an opportunity.
But in terms of that convergence, if there were one standard between fiat and crypto, right, where would regulators need to, where would they need to sort of address in order to enforce that?
Mm-hmm. Yeah, so certainly there are challenges for them to get their arms around. I think, DeFi is certainly one where, they're grappling with how to approach regulation in this new space. The FATF, the Financial Action Task Force, are developing their view now. We're expecting it to be published in the autumn about how they're going to look at how they're going to approach DeFi. So I think we should expect that it's going to be regulated in some way. I think we have an opportunity to help inform and influence that. But back in 2013-14, lots of people said it's impossible to regulate Bitcoin, and I think we need to kind of learn from some of those lessons.
Now that you speak of DeFi, there's been signals that the regulators are intending to regulate and govern decentralized finance businesses, and that they shouldn't be exempt from regulations. Do you think there's anything that DeFi founders should be incorporating into their protocols from the get-go in order to be ready to become, compliant?
Yeah, for sure. And, I don't think this just comes from the regulatory side, right? So I think as more institutional players are looking at DeFi as well, for example, if banks want to offer staking services to their customers, it is going to create that additional pressure on DeFi platforms to be compatible with regulatory requirements, because the big players, they won't want to use services that aren't compliant. We've seen Aave, for example, recently launched a KYC compliant platform that institutions can use. And so, of course, it does raise a lot of questions. It's not always clear how to apply the existing regulation, but I think what DeFi founders really should be thinking about now is how they're going to be ready and respond. So, looking at, could your platform become subject to regulation? What would that mean for you? Both from a people and a technology perspective. And how can you leverage existing compliance solutions to address, any of the regulations that might be coming, as well as, how are you engaging with regulators in that dialogue today? I think we heard at the end of the last session that, DeFi protocols are embracing this and actively thinking about how they can get ready and starting that dialogue early. And I think, that's certainly something that we saw happen in the centralized space. A lot of the early crypto native businesses kind of embraced the idea of compliance and regulation before it was even, it was clear in the statutes. And I think taking that early adopter approach to putting compliance at the core of your business, I think is something that is definitely a positive learning.
I see. With solutions like Elliptic that are available to crypto businesses, what are some of the hurdles that could still inhibit a crypto business from complying with AML and KYC?
Yeah, it's a really important question. And, at the end of the day, technology like Elliptic is just one aspect of AML KYC compliance, right? And so first of all, you can purchase the technology, but then you have to make sure you're using it appropriately and that you have understood what your kind of risk appetite, your risk parameters look like. But I think even more importantly than that, you have to have the right culture internally. So, what is the tone from the top? How is it built into how you make decisions? is compliance positioned and seen as kind of a necessary evil or a blocker to growth? Or is it actually embraced as something that can be a competitive advantage, something that can be a growth enabler because it allows you to unlock, new markets, new products? So I think, that culture piece really can't be underestimated, because, your compliance team will definitely take their lead from what the management is saying. Is this something that we're going to invest in and see as an enabler of our business, or are we going to, see it as that necessary evil? So I think you have to be deliberate about it, and I think you also have to invest in education as well.
Yeah. As a regulatory enabler, do you think that there are other approaches to harnessing both AML compliance and preserving privacy?
Yeah, certainly. So, at Elliptic, we see the desire for privacy, as a legitimate one. And we definitely don't hold the view that, privacy enhancing technologies are inherently bad. And so, clearly the Bitcoin, Ethereum, major crypto asset blockchains are highly transparent and don't feature much inherent privacy. And so, if you're someone who receives a salary in crypto, for example, it's easy to see why you wouldn't want the whole world to be able to kind of see that activity. But it has to be acknowledged that privacy enhancing technologies and things like privacy coins do present heightened financial crime risks. So, maintaining compliance with US sanctions, for example, is practically extremely difficult, if not impossible, when it comes to handling privacy coins like Monero. And regulators are clearly not comfortable with this. And we've seen some regulators in some countries, for example, in Japan, have prohibited exchanges from handling privacy coins. And in other countries, the regulators expect you to have blockchain analytic solutions for any coins that your exchange offers, which does make it almost impossible to handle Monero in a compliant manner. And so, what we definitely support people's right to use privacy coins or other anonymizing technologies, but users should be clear that there's going to be a trade-off. If they can't easily be distinguished from criminals, then they might see themselves limited in terms of the services they can access or how they can spend their funds, or they might just be subject to more due diligence when becoming a customer.
So, final question, any final piece of advice you want to give to both financial institutions or crypto businesses that are thinking about compliance? Like, what should they prepare for? And we'll end the session at that.
Yeah, absolutely. So, I think I've said it already. I think it's just that the businesses that have really embraced compliance as a growth enabler, one that allows them to launch new products and access new markets and revenue streams, are going to be the ones that succeed and grow in a sustainable way. And so, compliance doesn't have to be thought of as a blocker. I think that's a pretty old-fashioned view. And so, we should, as an industry, embrace, compliance as an opportunity to unlock opportunities and do business better.
Thank you so much, Simone. It's really great to have you, and we look forward to having you next year. Thank you.
Thanks so much for having me. Bye.
Bye.